I thought I had finally found a trading strategy that worked. I tested it using TradingView's replay feature. I tested it again with a very small amount of real money. It worked. Slowly, my account started to grow. So I decided it was time to trade it properly. That was the exact moment everything fell apart. For weeks, I did what most traders are told to do. I backtested the strategy. I practiced it. I refined the rules. Then I traded it live with tiny position sizes. The results were encouraging. Nothing spectacular, but consistent enough that I finally started believing in the strategy. I remember thinking, I think this might actually work. It was really a refreshing thought. So I increased my position size to what I considered my normal risk. And almost immediately, the losing streak began. One loss, then another, then three. At first, I wasn't worried. Every strategy has losing trades. But then it became 5 losses, then more. Eventually, I wasn't trading the strategy anymore. I was trading my frustration. I wanted my money back. I wanted proof that the strategy still worked. Every trade felt like it had to be the one that turned everything around. Instead, I kept losing. By the end of it, I had reached 15 consecutive losing trades. Not because I had planned to, because somewhere along the line, I stopped following my process and started reacting emotionally. So what actually went wrong? Well, looking back, the biggest mistake wasn't the strategy itself. The biggest mistake was that I had no safety mechanism. Nothing told me, stop trading. I had rules for entering trades, rules for stop losses, rules for take profits, but I had no rule for protecting myself from my own emotional state. That's the rule I was missing. Now I use something I call a trading circuit breaker. The idea is simple. If I reach my limit for the day, I stop. No exceptions. For me, that's no more than 3 losing trades in a single day. That doesn't mean the strategy is broken. It doesn't even mean tomorrow won't be a profitable day. It simply means I've reached the point where emotions are much more likely to influence my decisions. And the circuit breaker protects me from making one bad day even worse. Why it matters. 1 losing trade usually isn't the problem. Even 3 losing trades aren't necessarily the problem. The real danger is what happens after that. That's when frustration turns into revenge trading. That's when position sizes start increasing. That's when you begin trying to win everything back immediately. Those decisions can damage an account much faster than the original losses. Every trader will experience losing streaks. That's part of trading. What matters is having rules that protect you when you're no longer thinking as clearly as you were at the start of the day. For me, that rule is a trading circuit breaker. It won't stop losing streaks, but it can stop a bad trading day from becoming a disastrous one. If you're building your own trading plan, don't just include entry rules and exit rules. Include a rule that tells you when to stop. Sometimes the best trade you make is the one you decide not to take.